Hello, everyone. A very good afternoon to those who are joining us from Singapore and Asia, and good morning or good evening to all of you joining us from other parts of the world. Thank you for being here with us for today's online event on Deep Tech for Good, the Future of Trust, presented by SGInnovate and in support of Deep Tech for Good. My name is Jin from SGInnovate, and as a Singapore government-backed investor, we have been building up and driving deep tech innovations in AI, healthcare, quantum tech, food and agri-tech, and autonomous technologies across various industries. At SGInnovate, much of our work is to connect Singapore with the global deep tech ecosystem to learn how we can better harness technology. Today, we have our panel of experts who have started their companies based on blockchain technology as the new basis of trust, and they will discuss how their technologies have broken through the hype and created a transparent and trustworthy system for their industries and the future of blockchain technology for a better economy. Throughout the session, we encourage you to engage with our speakers by submitting your questions in the Q&A box located on the lower panel of your screen. Without further ado, I would like to invite our moderator for this discussion, Paul Griffin, to start us off. Paul, please.
Hello, thank you, Jim, and welcome everyone to this exciting chat today. We've got three great panelists joining us, so I'll get them to introduce themselves. So first of all, we have Tuhina Singh, a CEO and co-founder of Propine. Maybe you can give us a quick overview of who you are, where you're coming from, and your interest in trust.
Thank you, Professor. So yes, I'm Tuhina. I'm CEO of Propine. At Propine, basically, we're democratizing access to global capital markets. In fact, we exited a fintech sandbox with a capital markets license to custody digital assets very recently, about a month ago. And our solutions essentially allow clients to buy, sell, or custody crypto assets in a very regulated and compliant manner. We also have a suite of investment banking solutions so that we can tokenize securities, we can custody them, and manage all corporate actions. So in a small nutshell, that's who we are. Thank you.
Okay, thank you very much. We also have Gary Lowe, CEO and founder of Dimuto. Dimuto, I hope I said that right.
That's right.
Give us an introduction, thanks.
Thanks, Paul. Well, for us, it's somewhat like what Tuhina has said, but what we're doing is basically making sure that we can put the flow of goods and making sure that we can blockchain it, and then essentially putting the reverse of it in the flow of money to track what actually did you pay for it. So the system that we've built is literally one where to reduce the friction of ensuring that the flow of goods and the flow of money has now been seen and transparent in a way that is really plaguing our industry, where we definitely don't have the level of trust that we would like to do. And that's what Dimuto is trying to achieve.
Okay, thank you. And third is Joseph Thompson, CEO and co-founder of AidTech.
Hey, fine, thanks for the introduction, Paul. Hey everybody, listen, I appreciate your time. And a good morning from Ireland, by the way. I'm not in Singapore just yet, I can't get back in. So I'm Joseph Thompson, I'm the CEO of a company called AidTech. We've been around since 2016, and what we've been focusing on is basically, we said if Google built a search engine, we want to build a transparency engine. So our focus has been using blockchain technology for digital identity, and how can people use verified, trusted identity and data and verifiable credentials. So we've worked with governments, large NGOs, financial institutions, insurance companies, and it's really putting why organizations understand why they trust people, but they need to understand why they trust or do not trust their data. So a lot of enterprises have siloed data points, and the data does not give a holistic view on an end user. So we want to create that transparency layer that connects people with their data, which they can interact with governments, banks, financial institutions, and so on.
Great, okay, thanks. So this is about blockchain and trust, or the future of trust. But before we get into the future of trust, I'd like to kind of wind back about 10 years when Bitcoin came out with blockchain, and there's a statement made that we have proposed a system for electronic transactions without relying on trust. So the idea back then was we no longer need trust anymore. 10 years later, is that actually true? Has that panned out, or has trust just been moved somewhere else, or even hidden away somewhere? So that's my first question to the panelists. Who would like to take it up? Okay.
So I'm not sure about what the other panelists think, but I could be proffering not a very common point of view. So first of all, I don't think you can take trust out of human beings. We live because of trust. A child, when he's born, he trusts his parents to take care of himself. So our very existence turns around trust. So, so the whole idea that blockchain you can do transactions without relying on trust, I think is a bit too simplified. Blockchain does not create and it does not eliminate trust. It only converts trust from one form to another. So I think the larger point of view that people talk about, and again, I think it's a very simplified view, that instead of trusting the man in the middle, now you're going to trust the code. So first of all, it doesn't create or eliminate trust. That's first. Secondly, if I can say this, take a step back. In any economic exchange, there are three kinds of trust. There is institutions-based trust, there is a characteristic-based trust, and there is a process-based trust. So an institution-based trust comes from involvement of a central authority. So for example, a commercial bank or a government or a corporation doing its work, for example, Visa or MasterCard. The characteristic-based trust comes when we trust people who have something similar to us. Or maybe, they show certain values that allow us to trust them. So for example, we are likely to trust somebody who is similar to us, like maybe they are nerdy like us, or they are from the same place that we come from. And the third one is a process-based trust, which arises when we know that because of past experience, something happens, and hence from that, something else is going to happen. So when it comes to blockchain specifically, there are, I think, all three types of trusts are at play. So we have a central authority trust at play, even though people say that there isn't any, but it is constantly at play. For example, in recent times when the entire Bitcoin has, the entire crypto industry has gone up. So why has that gone up? Because there is there are these trusted figures that have come forward and they have tweeted about them. So whether it is MicroStrategy, whether it is PayPal, whether it is Elon Musk, whether it is MasterCard, these are all central authorities, or like these are authorities that have come around and they have put their value behind Bitcoin, which has suddenly caused everyone to say, okay, this makes sense. So there is that element at play. There is a characteristic based trust, which is at play when you say that, oh, there are people who are like other nerds who are like me who trust this stuff, and so I'm going to go into this as well. And then there is this whole trust there. There is a trust when you say that, okay, trust the code, you're still trusting another company that is auditing the code, that they know what they're doing, and the code has been checked to say that it does what it is supposed to do. So there is this trust on some auditing company that you're trusting that they've done their job well, and that there's not going to be another MakerDAO out there, right? And the third part is that there is there's trust that for example, I remember there was this time when there was this rumor that floated that Vitalik Buterin, that he died. The entire market crashed. I think at that time about $4 billion worth of assets got wiped out with that rumor. So that also shows that there is a certain amount of trust in a certain central figure. MakerDAO, when that went down, everyone went back to Vitalik like, dude, we need to do something. And then the whole ETH versus ETC saga happened. So I think we see all of those characteristics of trust definitely playing a part in blockchain. So definitely it's a major part of the entire ecosystem.
Thanks, I think, Gary. Yeah, thank you. Yeah.
Gary's just trying to, I think I agree with Tuhina, but Tuhina, I just think one part of your trust, you miss the fundamental of economics, I think. Well, I'm an economics major as well, and I agree with you. Because I have 15 years as a finance guy, and then suddenly I became 10 years as a farmer and a fruit seller. So suddenly I'm going to bring you to the real world of the world of farming and fruit, because that's really where the trust starts off, right? Basically in economics, we talk about barter trading, changing your sheep for lambs and sheep for cows, and fruits for something else, right? Butter trading. So I think this is where we take the same view as well, right? I think trust is really broken down when actually trade of the very fundamental of the products that we're moving has not even been established. Then when we start talking about the financial trust that you mentioned about, it's going to be more complicated, because we've been talking about a lot of it on the fintech side of trust. But where I'm trying to combine the both is to say that, well, if you could actually have the ability to trust where your food is coming from, or the product that you're moving and where trade is, then the rest of the transaction would also be required on trust. So it's very much built in, and where we are looking at it is probably one more form of trust, which is basically product trust, right? Where the providence of trade is, right? Are you buying gold, and is it really gold, or are you buying an avocado, and is it really an avocado? And then when the transaction happens, I think the institutions and then the players that you talk about in fintech will come in. So it's really where this blockchain and trust comes in, which I don't think can be broken up. We rely on many a times, I think in the past, like what Paul is alluding to, 10 years ago, we understand on false trust, right? We trust because we trust. We buy this from a supermarket because we trust the supermarket. Does the supermarket really knows where that product is from? Well, maybe not, right? But we trust the supermarket. So this is really where I think trust has taken a different form, and maybe that's where technology has really helped us in moving forward.
Joseph, do you want to comment?
Yeah, the way I look at it, you're talking about blockchain. I think if you look at the Bitcoin blockchain, everybody knows what the strength of that network is, right? So I'd always like to say that it depends, right? So if the way we work with governments and banks, large NGOs to give people digital identities, if a person is not trusted by an insurance company or bank, they're not getting any financial services, right? So at some point of the process, there has to be a verification done by one of these institutions, and they have to trust the data by the end user, but the end user cannot get access to those services by themselves. And what we always say to our clients is you can't defraud mathematics, right? So that's where the trust comes in. We're using potentially the Bitcoin blockchain, for example, that's irrevocable on the transactions. And when we speak, you know, it's great that we can have these conversations and talk about the technology, but when we actually look on the ground and speak with the end users, what's the product experience? What's the user experience like for these people? So we have to build a platform that ensures users or end users know that their data is going to be trusted as they go across different financial institutions. Can they bring their data credit profiles with them? Because one financial institution then could actually trust another financial institution who've done good KYC and AML. So I agree with your statement at the start, Paul, that I don't think using blockchain technology has at a point yet where it's fully trustable for all parties involved. I think we're moving in that right direction. And that's where the innovation comes in, like ourselves, to make things better, and that's what we hope to do. But again, I always relate it back to what's the real world problem that we're trying to face and why is trust so important. So to me, it really has to be focused on what that end user experience is and the service, because we're all offering different services here. So if we're focusing, so for example, we're doing some work this summer in the USA with a US government body to help victims of natural disasters get automated insurance claims, payouts, right? The process can take up to 12 weeks after a natural disaster happens, such as flooding. And the big problem up there, up chain and down chain with the data and reporting is the government is saying, how do we know that we're trusting these people putting in these fraudulent claims or not, right? So there has to be a verification of the data as a first point, and then it's easier to verify the data once there's trust at the beginning. And I'm just saying from the experience, we've asked ourselves this question, you know, over the last 5 years: how can we actually have different trusted parties working together, not pushing the technology forward, but pushing actually the use case of how trust is actually worked between all different parties. So that's how we look at it. But we do think that, you know, if you look at the Bitcoin blockchain for financial transactions, the mathematical trust is there, right? Okay, that's layer one, but layer two, you got to start building the applications that makes trust easy to use, right? So how's the user experience going to know that they're trusting their data is being shared or stored or whatever it may be? And just on that, we're doing a project with the Swedish government, and what they're attempting to do is to have citizens who who apply for social services in the government, they generate data. But they want those citizens to own that data that they generate. So if a person applies for welfare, they know that they can use the same data and credentials to apply for housing or unemployment payment or whatever it may be. So here you're trying to get different nodes or different entities to actually use those trusted points that they didn't verify, but it's good enough for them to actually accept. And that's what blockchain actually makes possible. And I think that's where we are in the life cycle of blockchain as we go forward, from my point of view.
Okay, thanks. So yeah, I think I've definitely seen here that talking about a movement of trust from kind of trusting in humans to trusting in sort of code and technology. I mean, will we ever reach a point where technology will be so prevalent and so trustworthy that we can just wake up in the morning and we don't need to worry about trusting any particular person because we've got crypto, everything's locked down, everything's encrypted, and so we can completely trust technology? Or will it always come back to humans at the end of the day, because somebody somewhere will be deciding what that technology is or supporting or coding it? And his thoughts on that.
I'm just going to add to Joseph. I mean, Joseph, it's good to see you anyway. I haven't seen you for a while.
You too.
Yeah, it's funny because we got involved in Mercy Relief recently, and the thing that we've been tracking was they were sending COVID kiosks over to Indonesia, and then we were just basically being able to track and trace that, did you send that kiosk that was built in Singapore, and then was it basically be sent? And we've been involved in a lot of this PPE that was sent to Bangladesh, and then making sure that the PPE was there. And then we were involved in kitchens, right, where the volunteers were basically cooking up the meals, and then the funding was actually based out of Singapore, and then we wanted to make sure that the funding was actually able to buy the products that was basically able to do that number of meals for the kitchen that was basically doing that. So going forward, like what Paul was saying, right? Trust at the end of the day is really going back to how would a human use that technology, right? I don't think technology is going to be the answer to everything. It really is just an application of the technology. And I was surprised at how my little technology that we were tracking for fruits was just suddenly being able to track for kiosks and lunches and PPE, and that's kind of like the way the mind is being able to use technology for the good that we can do. And that's really what I think the future of trust really can be powerful for us.
So what I'm hearing Joseph and Gary share is very powerful, right? But tying back to the conversation, they are very clearly articulating that blockchain isn't eliminating trust. In fact, it is increasing the trust between people. So any economic exchange or any other exchange requires trust. What blockchain is now doing is increasing the level of trust you can have on the other person or the other party to do that transaction by increasing the amount of data that is available to you to make that decision whether you can trust the party or not, and by decreasing the opacity, increasing the transparency through the entire process of the economic life cycle of a deal.
Yeah.
Right, so it's basically what we're doing is we are collecting more data. We are authenticating that the data being collected is correct, it is not being manipulated, and there is a lot of transparency through this entire process. So all of that is going towards increasing trust in other people rather than
I mean, sorry, I was just going to add to your point, because one of us, because we're doing trading of fruits and fish and vegetables and lobsters and what have you, right? And that's the point. We say that technology basically is not to error-proof the trade, but to prove the error of the trade, right? So that's really what you are saying as well, right? I mean, we're just saying that, look, just because you put blockchain doesn't mean that you're going to erase everything, that you don't need humans anymore. But at the end of the day, what we're using is blockchain is to say, if an error was made, we can show that where the mistakes was made, and then from there we can correct it. Because in the past, we couldn't do that in proving that there was an error. Yeah, to your point as well, Tuhina.
Absolutely.
Thanks. So yeah, I mean, I also like to bring in the area of kind of the amount of trust required, because I can trust somebody with, I don't know, $1 or $2, I don't really care. But if I'm going to invest 10,000, $1 million, that level of trust has to be significantly higher. So what's kind of happening in the terms of looking at the amount of trust which is needed for particular transactions or in particular areas?
Yeah, Paul, can I, sorry guys, I'm just going to jump in because I think fundamentally you touched on a very key point. Because for us, one of the reasons why we created this is because, can you imagine that when we are seeing the movement of avocados, just taking avocados as an example, right? That means you now know that you have moved a container worth of avocados, and the other guy says that he basically received the avocados. And then you put it into a blockchain system of a 7-to-1 non-fungible tokens. And then after that, you put the tokens and say, I paid for this avocados, and this was the container of avocados that I paid. Now, that's where the movement of goods and the movement of money is now transparent. And then when you talk about KYC and you talk about AML, then it's a different level. This is the level that we're working on. It means it's not about just knowing who your customers and what they are donating or where they are buying. It really is about being sure that, look, I paid for this avocado, and this avocado paid from Mexico, and it was the same volume, and then the volume is matching with the pro forma invoice that was sent. So I think this is going to basically be a combination of the movement of goods and the movement of money is going to be where the ultimate goal of how to ensure trust is there. And that's kind of like where we've been building our system for as well, to your point, Paul.
Okay, thanks. Yeah, does anybody else have any comments about the kind of levels of trust and how that's kind of been implemented or not been implemented? Maybe we're going for, hyper trust for everything, regardless of the trust needed.
Yeah, just to chime in on that, it's a funny one in different parts of the world. We found at different levels, right? So in more developing world economies, we did a really cool project with the German government in Tanzania. There was very little trust in the system, and we're talking about the health system here. So we were helping the German government deliver funds to clinics to deliver medicines and blood tests for pregnant women in Tanzania. And it turns out that as they were delivering all these millions and millions of dollars worth of funding for medicines, we were able to transparently show that 90,000 pregnant women all had the same blood type, which was completely incorrect. So it turns out that the hemoglobin machine for testing blood of the women was broken, right? So that meant that after that, there was doctors selling medicines at wrong prices, okay? So if you could follow that up the supply chain, the first point of breakage of trust actually has a knock-on effect on everything else, right? So it was almost a zero-sum game in that transaction. Because the women who were using their identity to go for blood tests and get, pre and postnatal care didn't know what they were getting was right or wrong. All right, but there's a problem in the system. So I think where we are now, I think it's a combination of trust in humans and systems and the trust of technology. Right, I think going forward, you could potentially eliminate human error if it's right or if it's wrong or if it's on purpose or not. That was just some of the eye-opening things that we discovered that actually helped us make us think about the derivative of all these transactions is clean, trusted data sets, right? And whoever can get these clean, trusted data sets in whatever vertical that they're in, it's going to have a massive advantage. So when we were focusing on using blockchain, it was actually what we should have been focusing on in this particular pilot was what's the outcome? What's the output that can actually have the German government, who's the funder, the NGO on the ground, the doctors, the women, there's 4 different entities. And if one of the data points in that was wrong, there's 4 wrong results to 4 different people. So it made us think about, you got to consider the technological point of blockchain, the transparency that it can bring in terms of financial transactions or food delivery. But it's also, do the humans understand what they're doing and what's the ramifications if they get this wrong? For us, it was life-changing things. It was giving the wrong medicine to pregnant women, right? So that's not something that you could get wrong, but actually help us maybe think of a different way of looking how trust is needed in the future. And going back to your point, Paul, we don't have all the answers now between humans and between technology, but it's fascinating output that we didn't expect at the time at all.
Yeah, and that is actually linked to a question which has been put about how much should governments be involved in regulating trust systems or not? Will that slow it down, or will it actually help?
Well, I'll start off, and I know, Tina, you probably have a different answer from me in this one, but the particular, what we're working with is usually around insurance companies, banks, and governments, right? Who are the deliverer of digital assets, digital twins, either of it's money or food, whatever it may be. So we have to work, the way we operate is working closely with governments, because essentially what we're doing is giving a person a digital identity with verifiable credentials, which means it's trusted, and then the government topping that person up directly, right? So in our use case, we work with them closely because we're trying to eliminate that fraud and corruption and make sure the end user gets what they're entitled to. Now, I know crypto anarchists and libertarians have completely different point of view on this, but I'd like to hear Gary and Tina, your thoughts on this.
Sorry, I wasn't quite clear by the time I read the question. It just left the Q&A, but I think the question was around whether it is easier to trust technology or trust the government, or like trust the people, right?
Well, that's okay. The question, so yeah, the question was, do you think government should interfere with or regulate the frameworks of trust, since the private market is open for all, and there are varying levels of trust standards across the industries and companies?
Okay. Should the governments, it's a very difficult question to answer. I think, okay. So my point of view generally on governments is that one, that there is for that matter any institution, right? Absolute power corrupts for anyone and everyone. Even if it is the most noble person in the world, once they have a lot of power concentrated in their hands, they will find it very difficult to deal with it. It really is corrupting. It has a very massive corrupting effect on people. And hence, that's true for institutions too, because it's made of people. So for anyone to operate properly with the right set of incentives, it is extremely important to create a system with the right set of incentives and with the right sets, with the right penalties and rewards built in. And that is true for governments as well. So whether they participate or not, governments have a very good role to potentially play in a lot of different types of social activities. But how they should be allowed to participate, they must be, and that's true for whether it's governments or whether it is corporations, we must have a check on them. There must be accountability and there must be transparency in terms of what their decisions are, what their actions are, why they're doing it. If you don't have it, then it doesn't matter whether it's a government or whether it's a private player, they will take corrupted decisions that will benefit their own selves. So it isn't about government or private. It is about anybody with too much of power with no accountability. And that is going to lead to, poor decision making.
For me, Paul, I'm just going to jump in and say I answered it actually, because my view of government and private sector is kind of clear, especially when you say maybe for vaccines related thing, I think the government plays a role. But when you talk about buying eggs from another country, or whether you buy more avocados, then I don't think the government should play a role in it, right? This is kind of clear. There's a commercial role and there is a role where, for the social good. So that's kind of like where I think the clarity should actually be there. Where there is this inefficiency, I think the government can definitely be good in being what it could be used. But then when there is a commercial role, in buying things, for example, where I am very concerned about is, for example, when you say you want to be sustainable and then you say you want to build vertical farms, my big concern would be, well, what you say vertical farms, for example, the amount of kale that you're building, that they're growing, is that what the consumption would be for the domestic market? Or is it a kale that actually be more efficient if you just buy kale from every other country that is growing kale, right? So this is where I think that sometimes a government intervention is required and sometimes a commercial role is actually be there. So that's sort of like the way I think the view should be in terms of government versus private sector.
Right. Okay, thanks. Yeah. So I just want to take it to a different angle now and look at, okay, we know, well, let's assume we can trust blockchains. Let's assume that it's all lovely in the blockchain world. But what about the Oracle problem? What about the data coming in? How can you trust that the data which goes into the blockchain is going to be good data? And doesn't that kind of, then demerit the use of all the data in blockchain if you can't trust what's going in there? So how is that handled in various situations?
Well, Paul, isn't it rubbish in, rubbish out, right? The blockchain wouldn't clean the rubbish, right? So I think that the truth of the matter, I think to people who use this blockchain is really, to me, a very fancy Excel spreadsheet. It does a lot of good, but it doesn't eliminate the wrong, right? I mean, if you put in the wrong data, it is going to be wrong no matter what system you put in. So that's sort of like the way it is. Blockchain is not the answer to making sure that it will be the right data from that perspective.
I mean, Joseph and Tahina, how do you deal with that issue of rubbish and rubbish being processed and stored?
Yeah, it's a good one. For us, it's probably more relevant because we base everything around verifiable credentials and digital identity, right? So if you get the identity wrong, everything else is going to be wrong in it from a base, right? So there's two ways you can look at it. You can have self-provisioning, where a person provides their own data to get onto a platform to access a service, for example. But that personal data has to be verified, right? So if someone's looking for welfare, or if they're trying to get a bank account, whatever it may be, or if they're trying to prove they got a vaccine and they want to travel, that data is going to have to be verified by probably an external party, right? But saying that, if you're looking in decentralized dApps on the Ethereum network, you're going to have a different point of view. And really, I guess it depends on the use case. For us, it's important to get the data right. So the approach that we've taken through trial and error is, if somebody accesses a service, they self-provision. So for example, we're doing something in the US where people living in areas on the coast will self-provision to get aid relief before disaster season hits, right? Their data will be verified. So if the US government body agencies that's delivering this funding knows that they're working with somebody whose data has been verified, so the person's provided it through their social security number at one point, everything after that is trusted. So they know that they can actually give top-ups, they can give people money to go and buy in local stores, whatever it may be. So at the moment, I still think it's a halfway house, which is verification is needed by both, because like I said earlier on, for us, the derivative here is clean, trusted data sets. And once you are at a point where you can trust the data that's generated, it's a lot easier to actually get buy-in, I guess, from customers, from corporates, from governments to actually move this forward. But again, what type of blockchain are you using? What's the use case? Is it, do you have to give over your identity, or do you want it to be an anonymous dApp, for example? So I understand those points completely. It's not the field that we're in, but from our experience, it's the data in is a vitally important part of getting the service correct.
I don't think I can add anything more to this. Joseph and Gary have already captured it correctly. And I think, Prab, your question is at the heart of what a lot of people miss when they say, oh, land registry, everything can be done, without any trust, whatever. Like, it all boils down to how does the data get in? Like Gary, avocados are coming in, but then, who's putting in that data at the end of, who's monitoring that endpoint is vitally important, and is something from a systemic point of view, I think could be a potential single point of failure unless it's taken into account. Absolutely.
Yeah, so we've got a good question here. So from Lisa Yao, which is more difficult, trusting technology or trusting people? And how big of a role will institutional trust play in the future?
I don't think there is any conversation around trusting tech. You're not trusting tech. Anyone who thinks they're trusting tech don't know what they're trusting. You are trusting people end of the day. When you're trusting tech, you're trusting the person who built that tech, the person who audited that tech, the person who tested that tech. So at every point, you're trusting somebody. And most likely that person is either somebody you know, as like, oh, there is this really well-known person who says he's audited this stuff, and hence and it's an open source and it is like fully trusted, or there are these 2,000 people who have tested. You may democratically source that trust from 200 people, or you may source that trust from a single company or a single person. It doesn't matter. You're sourcing trust from people. Make no mistake about it. You don't trust anyone but a human being, end of the day. So you may have technology as an intermediary. I think that's my point. So.
And Gary, Joseph, do you agree with that statement? Or?
Yeah, I think it's the people trust is the more difficult part, definitely, from what we're doing. We've delivered aid in Syria, in Lebanon, but we see fraud everywhere. Like here in Ireland, if somebody signs up for social welfare, they can sign their name in Irish and in English. They can sign for the dead parents or the brother who's emigrated, and the system can't read what's right or wrong, right? So you're going to have multiple levels of fraud, and it's the same. It's the same in the UK and the US. So yeah, but building technology that can help eliminate that fraud, and so it's making the tech more trustable. But humans are always going to find a way to do what they can do to get as much as they can, I believe. So yeah, definitely humans are harder to trust, in my opinion.
Yeah, no, so I want to say something, right? I think we are addressing two different points, Joseph. What you're saying is absolutely true. I'm not saying that you're going to trust all humans, right? I'm not saying that everyone's trustworthy. What I'm saying is, end of the day, you're trusting people and not technology. That's what I'm trying to say. When you're trusting, you can say that this one person A is more trustworthy compared to person B, and person A is going to help me figure out whether person B is trustworthy or not. I mean, that's a separate question altogether. And I agree with you, Joseph, there, that you're like, okay, there is a trustworthy piece of technology built by a trustworthy company or organization or person, and he's going to help me navigate, in a set of circumstances where I'm not very comfortable with. That's totally fine. But end of the day is, I guess what you're still trust, like what I'm saying is that you can use technology to help get more data, but end of the day, even trusting the technology means that you're trusting somebody else who's created it. I guess
probably with the exception of the Bitcoin blockchain, where it's fully open source, but how many companies fully open source everything these days? Again, another conversation, I guess.
But even
that's
there,
just going back to.
So in there, we're still trusting the miners to actually mine correctly.
Exactly.
We're still trusting the developers who put through the code changes, that they aren't going to collude or do something.
Absolutely.
Yeah.
Exactly.
You're still trusting people, right? End of the day, you may trust 200 people coming together in an open source instead of, trusting a single person. Now you're trusting 200 people who come together. So a point of failure is not singular, but so your trust is probably based on a stronger rock bed, but still that trust is based on people.
Well, I think that's the interesting other part of this question is, currently with centralized systems, you trust a bank, you trust WhatsApp, you're trusting Amazon, Google, whatever. But are we kind of moving more away from institutional trust towards more decentralized or group trust, or even peer-to-peer trust? And that shift is happening, or is that just just a flash in the pan, as it were? Yeah.
Okay.
So we are moving away from trusting institutions to trusting people, I guess, is the main question.
Yeah, I think it's the process is happening now. We just have to look at what's happening in the markets, and people are getting excited about it, and not just the crypto people. And we've been in this for years, but I get quite excited when people I haven't seen in years are texting me and emailing me, going, "Here, I know you mentioned Bitcoin 7-8 years ago. How do I get in? Can my money be confiscated, etc., etc." So I think I think this naturally needs to happen, right? So you have hype cycles, and then you have noise and so on. But at the same time, when you are seeing these uni swaps and these these lending platforms where it could be fully decentralized, where people can get higher interest from a pool than you could get from negative interest rates, which you're actually paying the bank to mine your money, people are going to start looking for alternatives, and especially with QE and the amount of money flooding the system now, it's almost forcing innovation onto the blockchain crypto cryptocurrency community, which I find fascinating. Are we there yet? No, I think we're only at the very, very start of it. I think it's another 5 or 10 years away before you have that full decentralized structure of financial products and services. But I'm personally, I'm delighted to see it. I think it's really, really exciting. And I think it can actually democratize a lot of financial services for people. So if you look at the last 10 years, people, say in their mid-30s, got hit by the financial crisis of 2008, 2009, and they're getting hit by it again, right? So in those 10 years, they probably lost 10 years worth of good credit to get a mortgage, to get loans and things like this, right? So the other alternative is this new financial system around DeFi, decentralized finance, which, you know, I'm really excited about personally going forward. But I just think it's a different way of people are looking at different things, that they may not trust financial institutions the way, say, our parents would have before previously.
Yeah. Yeah. Okay, we have another question on, it seems quite interesting, I think, from Anne. So which industries or organizations do you think are more advanced in using blockchain to enhance trust? Maybe countries, industries, organizations. What are some of the key barriers that have prevented others from doing the same? Like, I'm aware that certain countries are now introducing some of the central bank digital currencies. So some countries are kind of embracing decentralization, I think, quicker than others. So Tahina, you wanted to say something?
I think generally speaking, from an industry perspective, supply chain, I think, is most advanced in terms of what they're doing with blockchain, for sure. In terms of the production level projects that are there, I think they're quite advanced. Capital markets, we're seeing a lot of work happening, but they are still at a very proof of concept level, honestly. I don't think they have reached the stage where they can, unless you start I mean, even payments. I think payments is one place which is getting massively, changed. So I suspect, I would say, like, first is probably supply chain. Second would be payments, remittances. I think that's getting transformed significantly. So that's, I think those are definitely front runners.
Tahina, you're basically coming up to my alley, right? Because that's exactly where we are, right? Supply chain, I think we definitely got a handle on it using blockchain. And I think the latest that we have done is to put in payments and then to be able to now use digital wallets between our buyers and sellers, to now using the transfer of tokens, to on-ramming from fiat currency to USD token stable coins, doing the transfer, and then off-ramming to now basically go back to fiat currencies, and then to basically be able to track the purchase of a PO and then the payment of a pro forma invoice. I think that's really where we've been using our system for that, to be able to see the movement of goods and money. And then you're spot on. I think for us, use case is really very real for us. I mean, we're moving millions of dollars of real products, you know, and therefore to us, we're really using it to solve our nightmares, because in our business, it's really about this nightmare of lack of trust, right? And it was this lack of trust that pushes Dimoto to create what we need to create, because we need to use the technology to build that trust, so that we take away the people's element as much as possible. Because I always tell the story about what a surveyor in Mexico for the avocado, what the avocado Mexican eye surveyor has, and a Chinese surveyor has a very different way of looking at things. And that's how we've been using this. And hopefully we can have a certain form of stand-up trust, which could also be very much driven by AI to actually get us to where we need to be.
Yeah, so I think Gary is definitely the front runner here, but I think Joseph and his industry, I think identity is another one which is really, really big, and it's coming of age. I know of a lot of really serious institutional players, and Joseph is deep in there. He'll be telling us a lot more, but I personally think identity is one huge place that will be transformed significantly because of use of blockchain, especially in countries like for example, India, where, you know, a lot of people do not necessarily have the right identity documents, which does not, which basically excludes them from a lot of, huge parts of the economy. So I would say, I think, Joseph, I think you should be sharing that rather than me. And the part that I come from, capital markets, I think we're going to be the third one if we get our act right eventually.
Yeah, I think actually capital markets is moving a lot quicker with Bank of New York Mellon and Goldman Sachs announced yesterday they're going to offer custodial services and crypto assets, which would have been unthinkable a few years ago.
But all of
but
that
yeah,
is remittances, payments, right? They're not capital markets. Capital markets, as in like actually rewiring that place up, that's going to take time. People are still figuring it out. It's so complex and requires so many people to come together. It's difficult in the financial industry for people to trust each other.
I think they have to because they're getting left behind. So, you know, the innovation's forcing them. But on the identity piece, it's funny when you look at it, developed economies and developing economies literally have the same problem. So if you look at the United Nations Sustainable Development Goal target 16.9, says everybody in there should have a legal identity by 2030. And unfortunately, the UN SDG pioneer for blockchain globally. So we've been dealing with this issue for years. But even over the last 12 months, we've got so much traction from developed economies. So global tier 1 banks wanting to say, how can we use digital identity where we have 6 or 7 departments within the bank, and these are multi-billion-dollar banks. Each of these different departments have siloed information on their customer, and our customer experience is pretty awful, right? So how can we use a credential that's trusted from the mortgage departments to the wealth management department, because we have these internal walls that we need to overcome. So and the banks are saying this, and we have a customer ringing up and saying, you have my details already. And they're like, well, we can't actually, we don't know those details because that's a different department. So the banks that we're speaking to are fearing that they're losing customers to more neo-bank type organizations that it's just a one-stop shop for people's data. No, they don't have all the products and services. So it's really fascinating. It's really fascinating. In the US, as I say, we're doing stuff there, and we're also doing stuff in the Philippines with Microsoft AI. How can identity be used to verify the person, but also enable the person to see if they're missing any other benefits, right? So if you have a family with 3 kids and the father's unemployed, their data credit profile might enable them to get other services or other payments that they weren't aware of. And it's all based on a credential that the user's identity can be trusted across different departments. And the goal is external organizations, right? So almost like a passport for your data, but you're in control of it. That's where we think the future is going. And yeah, it's a 2 billion people problem globally, you know, people who are underserved and underbanked, which is a massive opportunity. But again, in developed economies, we all know the cost of KYC and AML and the fines that banks get because they don't do this correctly after all these years. So there's multiple opportunities, depends on which way you look at it. But everybody really, I think going back, everybody really wants to trust the person and know that they're serving trusted data. Trusted data, you know, it's so important.
Thanks. Yeah, I mean, it's a good question raised here about the amount of technology that particular areas have. It's fairly low, and particularly aims at Joseph saying for areas in the world without basic connectivity to technology, how would they benefit from what you're doing? Would institutional trust be their only bet? So I mean, you know, for different grades of technology infrastructure, does that also impact on the usage of blockchain and how trust is implemented?
Yeah, anywhere, that's just real quick. Anywhere with low connectivity, forget about it. I'm being honest, it's very hard to do, because then you're trusting some other person to offer the infrastructure in the first place, and then that they kind of fall back into, let's have a private internal network, and it doesn't need to be blockchain related. And so we've spoken with organizations who've asked us to solve the problem, and it doesn't need to be blockchain related. So, you know, there's no point taking the conversation further. And it's unfortunate, but we're not in the business of creating telco infrastructure networks in developing economies, unfortunately. So, you know, and then you have the use cases where you don't need blockchain, you know, to save yourself some time and hassle, I think. But yeah, that's our view on it.
Gary or Tahina, have you come across areas which can still use blockchain even if they have low technology? I mean, I guess you've got to have at least probably an Android phone and a
yeah, I mean, for us, it's like coffee beans in Colombia, or vanilla beans out of Papua New Guinea. I mean, how low tech can it be? It's as low tech as you could possibly think, right? But then at the end of the day, it really is about ensuring that an Android phone being able to show that the farmer basically packed what he did to an aggregator, and then an aggregator being able to send that information to a packed house is really what we've been using this. And it's as low tech as possible. Like, and you can imagine we're taking what sea cucumber out of Papua New Guinea. I mean, that's another example of how low tech can you go. And this is to ensure that at least we're empowering the farmers or the people who are actually part of this supply chain that in the past, you know, we will never know of them. But I think one mobile phone on an Android system is now being able to empower them to give us the data that in the past we were only sort of like dependent on institutions or governments or agencies to give us that data. But now we're able to actually empower quite a bit of the low tech. And I think for me, I'm playing in a space as low tech as I can possibly be playing.
Yeah, Tahina, do you have any comments on that?
So, so I play in the capital markets space, right? And it's a bit of a derivative because if you can make capital markets more efficient, it has a trickle down effect everywhere. So whether it is smaller companies that are trying to raise capitals more efficiently, whether it is you know, somebody in Venezuela or you know, Brazil or you know, any other country, Nigeria, that they're trying to escape government prosecution through hyperinflation, and they want to you know, exit the or if they want to exit the capital controls that are being unfairly put on the people, you know, and just having a simple phone, they can potentially buy into crypto assets and be able to transfer their wealth outside of what is fully controlled by the government. So to that extent, I think there is a lot that can happen, but not in the most direct manner as you would imagine, but as a derivative effect. I think whatever impact we create on the money, on you know, on remittances or payments or capital market efficiencies, it has ripple effect of like several derivatives across all economies, and it will trickle down to the lowest level as well.
So, you know, coming for 15 years in the finance industry, and I was a capital markets guy for 15 years. So this is kind of like the combination that you're just talking about, right? We'll have a separate conversation because this is the truth, right? What you're talking about, it really is. But if you cannot see what you're moving and you do not know, because even in the banks, sending you an LC, talking about a document, will not give you the certainty that the items was moved, right? But if you can really see the movement of the goods and verify the movement of the goods, then I think the capital markets can play a very powerful part in combining this movement of goods and the movement of money, right? And then this goes back to what Joseph is doing, right? Because when you try to do the future of what we're talking about, trust, and then what we're trying to do for the future of the good that we're trying to do, at least if you're helping somebody in Venezuela or Papua New Guinea, you know that this is where that item is going to go, or the money is basically used for the good or the impact that we're talking about. So I'll talk to you more about it, Tahina, later on.
Okay, thanks. So looking to the future now, there's a good question from Jordan saying, what do blockchain-based companies, or I suppose anyone involved in blockchain, need to do before individual society and governments are more willing to apply blockchain technology across all infrastructures, supply chain engineering? I mean, we're seeing it in certain places like trade finance and other areas, but what needs to be done to accelerate that or do more to get more people on board?
Yeah, I think one of the first points is
I think this is already.
So yeah, I was just saying there. I think, yeah, thank you. I was thinking that one of the first things is a lot of the user experiences are pretty awful and everything blockchain related. If I'm being honest, there needs to be more creative people and designers to come in, because there can be a lot of technical people and a lot of innovation and non-fungible tokens and all these great products. But if people can't use them, they won't use them. You know, so I know a lot of people recently have tried to get into to crypto and Bitcoin, and they're like, oh, you know, it's too hard. I don't understand it. What's this? My private keys and things like this. So I think it's one of the biggest issues across all industries. You know, to help improve. I think, you know, it will lag behind. My fear is that blockchain and cryptocurrencies could be a speculative tool if the products are not improved for the usability and the design. I think that's one thing. I think the second thing is, I think Singapore does this very, very well. It makes it a safe playground for companies to start and do all these types of innovative things. So I'm based here in Ireland. In Europe, we've moved our whole HQ to Singapore. I'm relocating to Singapore, and I think Singapore, so we'll give kudos to Singapore itself for doing this. I think they're doing a fantastic, fantastic job. So a lot of the regulatory hurdles or the opportunity is not in a lot of places. So, you know, companies are looking to get into space and say Singapore, focus on product because there's enough problems to solve. That would be kind of my experience and my advice or feedback for people looking to get into this space. Sorry, Dean, I interrupted. Go ahead.
No worries. So I fully agree with what Joseph is saying. I think product experience is very important, and we need a lot more product managers in the space. Apart from that, regulation, extremely important. I think the biggest risk for the space is regulatory risk. And in the capital markets, I make a strong distinction between where crypto is and where the security tokens or the traditional capital markets infrastructure is in place. So I would say that crypto industry has already moved significantly forward. The infrastructure is being, you know, created left, right, and center. So we've moved past that innovators. We've moved past the early enthusiasts. We are reaching a point where, you know, mainstream is coming into crypto today. So that's it's you don't really need to do anything except that these people will just continue to work, and you can't do. I mean, that's the pace. That is the curve of adoption for any new technology, which you can't, like, you can never have laggards come in too early, right? So it's a natural pace of innovation that you cannot change, and it's moving in the right direction. Capital markets, I would say, is still about 2 years behind crypto. I think some of there were 2-3 things that really need to be in place. One is clear regulations. I think we've moved quite a bit forward, especially in Singapore and a few other jurisdictions. I think things are moving forward. We recently had an ETF being approved in Canada for crypto. Huge step forward, right? So regulations is one. Second, infrastructure, which is end to end. That needs to be in place. I think it's beginning to come together. We have names like PayPal and MasterCard announce it. We've got DPS, we've got Standard Chartered, we've got Temasek, we've got SGX, we've got NASDAQ. You know, it will take its time, right? You know, it takes 9 months to bear a baby. It doesn't matter if you have 9 moms doing this for 1 month at a time, right? So that time will take, but be assured that there is nothing else that needs to be done. Just need to follow through the process that's already been put in place. It's a ball that's set rolling, that's not going to roll back any longer. It's just going to keep moving forward.
Yeah, I mean, Tahita, you're right. I mean, for me, trying to basically put the combination of what we're doing in the practical world and what we're doing in terms of making sure that the real world cases, right? I mean, to me, real world case of transferring, whether it's a product, whether it's a trade, and then showing that the transfer of money, the payment, you know, whether can you do financing, can you do insurance, and then where the capital markets can then be plugged in, and then you can use cryptocurrencies to then use it to stable coins or using fiat currencies, or whether you use ERMB. I think at the end of the day, the use of capital markets to facilitate trade will definitely come in a way when real cases can actually be demonstrated. And then in the meantime, we're moving in the right direction by making sure that the infrastructure is there. And I think that's where all of us are trying to do. What our technology is building is to ensure that we have the right technology so that we can have the right compliance, so that people can then write the right regulations. Because you can have all the wonderful regulations, and if you don't have the right regulations in terms of infrastructure to be put in place, then all these regulations will just be pointless. So I think it's like what Tuina has said. It really is about making sure that the time is there to basically digest what we're basically working towards, and then in the right direction that will probably be achieved.
Okay, thank you all. We just hit on the time now, so want to thank all the panelists. I think we've covered some good areas. I think we see that technology is basically improving trust, which is a good thing. That means we can do more. It's going to end up with humans at the end of the day anyway. It always comes back to the human element. We've heard about avocados and how they move around. And yeah, we still need to look after the data going in. So I think the future also looks very exciting as well. I think really saying we're over the hype curve, the Ghana hype curve. We're well beyond the hype. We're now into that kind of nice improvement, growth with, you know, I think regulators will help, definitely user experience. And I think to me, the end of the day, blockchain will disappear into the background as just another technology that is enabling a lot more commerce and a lot more products and a lot more health identity. So yeah, a very exciting future. And yeah, thanks again to the panelists. Thanks for everyone for your questions, great questions. And I'll hand back to Jin now. Thank you all.
Yeah. Thank you, Paul, and thank you to all our panel speakers for the great sharing. And to all our attendees, thank you for your ongoing questions. It is always very heartening to see so much enthusiasm at our online sessions, but real conversations often happen after, so we do hope that all of you can keep connected. We do have a recording of this session that will be uploaded on SGInnovate's YouTube channel, so do head on there for a review of today's event. And until our next online event, thank you everyone and bye.
Thank you. Bye.
Thank you. Take care.